Hello traders, Gary Wagner here about 11 o'clock in Honolulu, 6 o'clock in New York. It is September the 1st, it is Tuesday, and this is the Daily Report for Gold and Silver. What a roller coaster ride we have seen in the markets across the board. Crude oil, after having one of the most dramatic recoveries, sells off in incredible numbers. In fact, when we take a look at crude light this morning, we can see that it has sold off roughly to 45.41 after trading as high as about 48. Let's get the specifics up in terms of what we saw for highs and lows, because it's a really dramatic range. High almost $49 a barrel, 48.87. The low, 44.38, closing at 44.47, which is roughly right off the lows. That, along with a stock market that has really sold off dramatically, 57 points in the S&Ps. You can see why I recommended that we actually enter the market from the long side or put a gold position on yesterday. And let me show you a couple of the charts that I was looking at and what I'm thinking about. Now, last night I sent out a trade alert. Market was trading roughly at the same point. It's at 39.80, 1139.80. Market was roughly at 1140. Did rise up to about 46, but these were the things that I'm looking at. Besides the obvious elephants in the room or the fundamental factors that are currently in the market, we're going to, I believe, see a weaker U.S. dollar if we have equities continuing under pressure. We've got crude oil literally falling out of bed. There's very few safe haven plays right now. In fact, when I looked at the commodities and stocks across the board, about the only thing that was up today was gold. So in light of that, here's the charts that I sent out yesterday, and I want to give you a kind of a rundown as to what I was looking at and why I think we've got a decent play here. The first thing is we're looking at a 720-minute half-day Japanese average chart. So you can see that we've gotten this nice V reversal. And what I mean by that is after this defined uptrend, we have a defined downtrend, and this is that pivot point, and that's the V reversal, where you've got the downtrend and then moving up. You also have the MACD, which, as this market was selling off, in other words, after it hit these tops right in this area, you got a cross, and that cross, of course, indicated lower pricing. That came in right here. You also saw momentum go from the positive directly to the negative. But if you look at what we're seeing right now, you've got that MACD, our red line, which is our faster of the two, moving and hooking back up, which means that that could be absolutely giving us some sort of a key reversal in this area. So that is one of the technical charts that we looked at to define or derive some information from. And the next chart would be our daily chart. And as you know, I've been talking about this chart over the last couple of days. What we have been observing is ever since this market began to fall, and it fell roughly from 1171, you can see these 2 days, these two double bottoms right in here. But more importantly, we had this long red candle, a star, and then a green candle. So we identified, without a question of a doubt, a very nice example of a three-river morning star. Now, that alone doesn't necessitate getting into the market, and that's why we looked at not only the Japanese average, but the MACD. So you've got these three candles forming almost a perfect three-river morning star here. But the key was yesterday, we really didn't get the follow-through, because to actually take this trade, you really need that confirming candle, which is a really strong update following the formation of this pattern. And we didn't get that yesterday. If anything, we got consolidation. That's this doji that we see here. Well, late in the evening, as the S&P futures were falling, the stock market in China was falling, Europe equities under pressure, and they really began to run gold to the upside, it did give us our confirming candle. And that's when we actually went ahead and triggered that particular buy signal. Now, if you look at this top, you can see after we actually issued that trade, market did come up, as I said, hit a high, I believe at around 46 or so, but since then has come back down to about mid-range for the day. The next chart that I wanted to look at is the same daily chart, but as you can see on the left-hand side, that's that standard candlestick format. Japanese average format is the right side, and they look very, very similar. The only difference, of course, is you don't quite get that kind of a pattern, which wouldn't be identifiable in a Japanese average. But the key is, even on our daily charts, we are getting this reversal set, the pivot point, and our green candle without the lower tail. So that, to me, is also positive in terms of what we're looking at in the market. And as I said, when we look at our Japanese average on our half-a-day candle chart, what we do see is that nice V formation. So those are the facts that we are looking at right now. My recommendation is obviously to maintain your current position and to maintain your current stop. And then lastly, I do want to give you a sense or a feel for why we're placing the stop where we've actually put it. Now, I said to place it below 1130, 1129, and it's really based upon a key level of support. First of all, that's really the recent lows that we saw here. It's where it opened and closed on yesterday's candle. But when we look at our two retracements, the 38% retracement of this longer move, as well as the 61% retracement of this shorter move right here, which is from here to here, we come up with that harmonics, meaning we're getting that same price point. This is on a technical basis, a pretty critical area. We've put it, by putting it below 1129, it really gives us, I believe, a little bit of safety. It is a tight stop because we're only looking at risking in terms of the trade itself, maybe $10 to $12. I would recommend 12 because I'd want to keep it pretty loose below this point, but that's the rationale behind the stop itself. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update review. Bye-bye.